My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you, put it in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Never in a million years did I think I'd start paying so much attention to CDC.gov. CDC.gov, the official website for the Centers for Disease Control. The organization is responsible for protecting us from the coronavirus outbreak. CDC.gov was a major reason the market could explode higher today. Dow surging 408 points, S&P pole vaulting 1.50%, NASDAQ soaring 2.10%. We don't really know how this epidemic will play out in China, where it started, the rest of the world, for that matter, where it's spreading. But the CDC is indeed getting its arms around it and slowing it down, aided by the president's decision, draconian some would say, to basically ban foreign nationals coming from China to our shores. The result? The virus hasn't really been able to spread with alacrity here. Not like you would have expected based on what's happening in places like Wuhan. What is the CDC saying? Well, I'm going to summarize it, put it in English. They're basically saying that the illness is a medical crisis over there in China, but it's only a public health crisis here in the United States, and therefore it's manageable, because we're real good at that. When you don't have a vaccine or a cure, you need to use a quarantine. And so far, our quarantine, a lot of critics didn't think it could happen. It's working. Yes, you see a lot of people walking around with masks, a lot more carrying Purell, which really does dry up my hands, by the way. People have Clorox wipes literally at their fingertips, something that's not even included in terrific numbers that company reported this morning. The remarkable thing here is what I would call the CDC's new level of certainty. When they addressed the coronavirus outbreak last week, oh boy, they gave us little certainty about anything from detection to prevention. Now they make it sound like the quarantine efforts are working and their diagnostic test is adequate. I almost feel like that we're being played. It sounds so good. The CDC scared us out of our wits on Friday, knocking 600 points off the Dow. Then we were confident it was all get out today. We sent the Dow up another 400 points. 600, 400, up 100 yesterday. We're almost back. So, are we good here? Can we stop worrying? Now, I know a lot of people feel that way. They think you just have to look through the valley of the shadow of the coronavirus and imagine everything's fine. If everything's fine, stocks can surge to new highs as they did today. I'm sensitive to that. I didn't see this rally coming today. But you know what? I'm maintaining my cautious stance. I have reservations. First, right now, the market's saying that China will soon be back online. Their factories will be humming again after a rough holiday season. And that's why so many stocks with China exposure, including Chinese stocks, are roaring, like Apple, which rallied $10. However, I worry that maybe that's a false sense of security about China, because the situation really hasn't improved there. In fact, the CDC tells us in their same rosy projections, not going to, that's my word, in their same certain projections, that the number of infections and the death toll will keep climbing in China. There's no solace over there. In short, China's not clear yet. Yet it's possible they'll still be back online, but it's also possible that things get worse in the PRC before they get better, and they don't come back online. Second, the Chinese government has injected a massive amount of stimulus in their economy, close to $250 billion, not million, billion in the past 2 days. But I think that's masking how bad things really are over there. That stimulus created a strain of positivity worldwide, and our markets benefited big time, too. It also seemed to relieve the tightness in our bond market, which sent yields higher, which suggests that the flight to safety trade might be over, meaning we're on more stable footing, meaning unlikely to have a recession. But let's be real. Between the illness and the quarantine and the fear of going out, the Chinese economy is slowing down. So I'd use this rosy moment to reposition, do some selling in stocks that are too levered to Chinese consumer travel. I think those have got downside. Third, the earnings themselves have been terrific this week. So when you take the virus off the table, not that you really could do that, but let's say you could take it off the table, you got a bullish picture of the U.S. economy. Tech in particular is on fire. I know Alphabet reported some seemingly disappointing numbers last night, and I'm getting the feel that people think that that was the only stinker. To me, Alphabet's giving us the opportunity we've been waiting for to pull the trigger. The company finally broke out the cloud and the YouTube numbers, which should only get better and better. So you got a low baseline. Yes. Even though the stock was down 2.5% today, it's still in positive territory this week. Hey, speaking of tech, you know what was the hottest group in the world? Was the Cloud Kings. Yeah, all the stocks we always talking about, the Adobes of the world, they're white hot. And there's no real reason for that strength, though. Again, I find this kind of action unnerving. There's nothing driving these stocks up, aside from a cessation of new IPOs, which, by the way, does tend to bolster the group. That's my mental algorithm signaling that. We're still gradually ringing the register on our high flyers for the Charitable Trust. You can follow along by joining the ActionAlertsPlus.com club. We're making room to buy them back at lower levels because the next time there's some bad news on the coronavirus, you got to have some cash. Fair warning, I hold monthly calls for the club. I'm doing one this Thursday at 11:30, and the market's gotten clobbered almost every single time while I am holding the call. Quite unnerving. Fourth, we're hearing a ton of chatter about how smaller biotech companies are closing in on either a cure for this disease or a vaccine. In my own homework, I am getting that, but I don't feel certain enough to share it with you yet. If the number of infected remains low here and the disease is slowed down here, it does raise the odds that something worthwhile pans out. The prospects for discovery are much better than they were during previous epidemics because we sequenced the virus's entire genome. I remain hopeful, but I could be wrong. We did get some encouraging news from the FDA this evening that they have an emergency test for the disease, although I thought we already had that, but that's okay. And that the odds of a mass epidemic now seem relatively low. I thought we had that assurance, but that's okay. Fifth, the crux of this worldwide rally is that the coronavirus is manageable, that it can't overwhelm our system. While that's true in the United States, almost every market roared a great deal today. Yet many of these countries are very unlikely to contain the disease. Just because it's manageable for the U.S., that doesn't mean it's manageable for them. That's important. That's what the WHO is worried about. But that's why I was surprised to see so many industrials with major China exposure flying today. An awful lot of things need to go right before China can regain that 1% of GDP that I think this disease has lopped off. Maybe some of this was simply short covering, particularly here in the United States, because the CDC's downbeat stance on Friday brought out a ton of short sellers. More on that later. Long story short, we saw a rally in both the deserving and the undeserving. Finally, while the rest of the world's markets roared, I think some of today's strength, well, I think it had to do with President Trump. So you love him or hate him, he's been great for the stock market. Between the Democratic disarray in Iowa, I don't know if you noticed that, I think it was pretty palpable, and the anticipation that their impeachment effort will fail, I think that's pretty empirical. I'm betting our market gets in a boost. Political implications is what we call it. How neutral can you get? Implications. Bottom line, today seemed like a genuine relief rally, meaning it was motivated by a sense of relief that we'll make it through the epidemic intact, or at least in much better shape than we thought a few days ago. But let's not get ahead of ourselves. To me, this is an opportunity to do some portfolio reshuffling. Yes, you take profits in the ones that shouldn't be up, and you buy the ones that should when the market goes down. I want to go to Bill in Florida. Bill!
Hey, Jim. Yeah, this is Bill in St. Augustine, Florida.
Nice.
Nice. The question that I've got, Jim, with the recent euphoria where IBM CEO Ginny Rometty is stepping down after April 9th, and she's announced the new CEO, Arvind Krishna, the head of their cloud computing.
Yep.
With all the recent euphoria, is this just a blip, or does it look like that IBM finally turning the corner?
First, I don't think it should have been down that much. Second, Ginny has crafted a strategy, and it's a strategy that I think is a great one, which is moving aggressively all into the cloud. That was part of the reason why Mr. Krishna was named the CEO. It's also another reason why Jim Whitehurst, remember, they brought him in, they bought Red Hat. So I think that path, when you consider how great the cloud's doing with Microsoft Azure, how terrific the cloud's doing with Amazon Web Services, how excellent the cloud's doing with the Google platform. Don't believe the negatives. They're wrong. Thomas Kurian is doing a great job. Why not cash in for IBM? There's room for one more. I think there's a false belief that China's economy can bounce back quickly from the corona outbreak. I don't want you to get overconfident here. That's why I think you should use today's rally to take some of stocks off the table that are levered to China, because it's not going to get better that fast. I expect those names to be in a house of pain, at least for a little while. On Mad Tonight, after an update on the averages, Wondering who's driving this market right now? I'm giving it my take. Then, I've been urging you to stay cautious in the face of the coronavirus outbreak. But does today's move, you have to ask, does it change the narrative? Well, we got to be unemotional about it. We got to check the charts. And Chipotle reported after the close tonight. Does it do its earnings signal? It's still got spice. I know that the spice I had for lunch from Chipotle is starting to upset me. I've got the exclusive. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.